every week we get advice for free from Mike G. Mike Giordano with Williams Wealth Management, here to let us know how to save some money, keep our pockets full. You know, Mike, it feels like yesterday investors were concerned about tariffs, trade wars, and how this would all impact stocks. And as of today, it seems the markets continue to reach all-time highs. So we want to go ahead and have you help us out here. Why have the markets been able to ride back to all-time highs?
Well, I mean, it's hard to know sometimes right in the moment what the precise reason is, that whether how much is affected by the tax bill getting passed and how much is affected by maybe a little bit more favorable conditions on tariffs. Yeah, we still have tariffs that are higher now than at any point in any of our lives, but they're not as drastic as maybe they were there on Liberation Day. So it's hard to kind of parse out all those things. But generally what happens with investors is no different than what happens with people in the rest of their lives. They look at the recent past and they say, what happened in the recent past? And then they kind of make calculations based on that. And so in 2022, we heard all about recessions and bad things that were happening for the markets, and then it never happened, right? And so there's kind of I'll see it when I believe it, or I'll believe it when I see it, I guess I should say. And so the market kind of wants to see, you know, either inflation pick up or unemployment pick up before it's going to get kind of concerned.
And as trade wars are still, you could say, ongoing, are we still at risk or are we out of the woods?
It's impossible to know you're out of the woods until way after the event. And so that's true of like where interest rates are. That's true of market tops and bottoms and all that kind of stuff. But, you know, back before I had a wife and kids, I could be talked out of jumping out of an airplane for fun if it was a special occasion like a college roommate's wedding in Vegas. And the second you jump out of that airplane, you realize gravity takes hold and you start falling, right? That's an obvious fact. But with the financial markets and the economy, things can happen that go, oh my gosh, this is going to be really terrible. Things are going to start falling. Prices will start falling. The economy will start falling out of bed. But it doesn't happen that drastically. It takes a while sometimes for things to play out. So we're still in that phase of waiting to see exactly how it's going to play out. And the jury's still out.
And how should our viewers, you know, overall think about their investments?
Yeah, so I think a couple things you have to think about. It doesn't matter whether markets are good or markets are bad. You always have to think about what are your goals and what's the timeline, and then what's your risk tolerance. So you have to have those things in the forefront of your mind all the time because those help you make the right decisions, the most prudent decisions. The other thing you have to think about is we've had massive returns from the S&P 500 over the last couple of years. And if you take a look at the average return you're going to get, it's about a 10% rate of return on the S&P through a century of history, right? And so if you've had significantly better performance over the last couple of years than that, you have to at least temper your enthusiasm a little bit and say, I could be in store for something that could be less than that 10%. And that means that what you have to think about is if you're coming up on a goal and, you know, if the market changes its behavior, how is that going to affect your ability to achieve those goals? Then you want to start, you know, dialing in your exposure a little bit.
All right, Mike G, as always, thank you. We appreciate it.